It's the last trading day of the year, and investors around the world are hoping that markets end on a high note. In the United States, a short time ago, the S&P 500 was down slightly, but still hovering near an all-time high of 4796.56. London's FTSE 100 was up 0.14% at the close, but across the year it only managed a minor gain of 2.47%, far behind its international rivals. Japan's Nikkei closed down 0.22%, but the story of 2023 was much more positive. It was up 28% for the year, the biggest annual gain in a decade. Well, I'm joined now by investment manager and business commentator Justin Urquhart-Stewart. Good to have you back in the studio,
Thank
Justin.
You.
Welcome. So let's look back, first of all, at the year 2023. What have been the biggest moments on the markets for you?
Well, the main thing was actually seeing this change as how the market was going to be able to manage dealing with inflation and rising interest rates, as well as all the political and issues like wars and all those elements. So a lot of very negative issues. You could sit there and people saying, don't want to go near the market. Actually, when you look at what's happened to the companies, a lot of them had already been very heavily hit. So you're beginning now to see not just the high-tech companies, which have been the fashion fad for the past few years, that had gone away, but now more money going into those stocks which have been fairly well beaten up, and a thought that actually halfway through the year, inflation might have been being held to an extent, interest rates still going up, but maybe reaching their peak, and that made the markets actually come alive, particularly in America.
Let's talk about London. One of the things we thought we were going to see here was a flurry of IPOs, and that didn't happen, did it? What do you think that London did wrong, if that was what it was?
Well, to an extent, it is what London's done wrong. The London Stock Exchange has not exactly covered itself in glory. Apart from the fact it's also changing its name, so it's not even really going to be called a stock exchange to a great extent as a company, but also actually trying to attract new businesses in. Actually, companies like Arm, one of the big tech businesses of Britain, actually is going to have its primary listing in New York. And so New York is seen to be more international, whereas London was seen as the international market, and so if you didn't want to be tied to the dollar, you went to London. Now what you've had is more going towards mainland Europe, and those areas, some going off to the States, and London is not doing what a market should do, which marketing itself. There's no shortage of money, there's no shortage of companies, but they're not out there saying this is why you need a stock market to raise capital in the most cost-efficient manner for that economy to recover. London's got to wake up.
And you mentioned the US. We did have some highly anticipated IPOs happening there that didn't necessarily do as well as we thought they would, did they? What happened?
Well, what you had a series of them, often backed by private equity. Now, private equity always sounds very exciting. You've got to be extremely careful with private equity. They don't invest in businesses. They normally load a lot of debt onto those businesses. There's high expectation that actually the prices will rise, but actually if they are then finding themselves in a position where they're being greedy and asking too much, they flop. Or at least they don't get as high as being expected. So some people were pushing it too far. But as ever with the stock market, don't look short term. If you want to go gambling, that's why we have race courses. If you want to invest in the market, it's a longer term gain. So still good businesses, but they were probably priced wrong to start with.
Didn't seem to do too much harm to the US markets, though, because especially in recent weeks, they've been going great guns, haven't they?
It's absolutely amazing. A Santa rally, or call it what you like, it certainly has been. And to those areas which have previously been left behind. So what we'd thought about at the beginning of the year that we were so frightened of was now beginning to actually be managed. Inflation had come down quite dramatically. The next move in interest rates will be down. And the primary driver of the American economy, not the president, there's actually, of course, is the American consumer. Mr. and Mrs. Joe Schmo living in Little Rock, Arkansas, shopping in Walmart. And they own a house, and if their property prices are still going up, and they're in a position where they're earning more now, or at least their costs of mortgages aren't going up any further, they've got more confidence. And if the American consumer's up, that rushes elsewhere around the world and has a direct impact on China, of course, because America and China have a symbiotic relationship. They may bicker with each other, but they need each other. And so that, I think, is actually encouraging the move for next year.
So I want to get you to look into your crystal ball, if I may, and clearly I'm not going to hold you to any of these predictions, but what do you think we will see next year? Who will do well? Who will do badly?
Right, what you have to be careful of, remember, this year's fashion fad tends to be next year's tank top, so be very careful indeed. So the ones that have already done quite well, don't expect them to do it again. There will be a pullback in the spring. We wouldn't be at all surprised after a rally like this, it needs a gasp. Now, leave aside the political issues, a general election or presidential election in America, obviously not so important, the election in the UK, but also in terms of inflation. If that carries on down, interest rates down, then things are set fair for a continuing recovery. That's good news for the world. China, of course, will have to start managing the property market, which it will do, and so that'll be participating more. So I'm quite encouraged by all of this. So you won't necessarily see the ones that were the fashion fads last year doing the same. Look on a broader scale, maybe the banking areas, transport, those sort of areas which have been quite heavily, well, not heavily hit, they just didn't kind of go with the same enthusiasm. They'll start catching up again. And with a bit of luck, London might decide to join in this time.
Fingers crossed. We'll have to wait and see and have you back on soon to talk about it. Justin, thank you very much for joining us. That's Justin Urquhart-Stewart, the investment manager and business commentator.